Hey guys, what's up? Welcome to this channel. In today's video, we're going to be talking about advanced market structure. Now we're going to be using odd USD as an example in this video. Now, if you're new to this channel, don't forget to subscribe and also hit the notification bell. And also, if you have a comment, don't forget to leave the words comment section below. Now, moving on. The first thing trader does is understand the price movement. Now, because market structure is so paramount to what beginners and what advanced traders. So the first thing you want to be doing when you come into the chart is to understand the flow of the market. What's the current flow of the market? Now, the current flow of the market is what tells you what price is doing. And as at that what rate, it makes you to be able to what identify the current flow of the market. Now, odd USD currently is actually in the bearish trend. You can either draw it on the wicks or you draw it on the body, the trend. Let's see. Now, after drawing the trend line, you now understand the price actually moving on the downward trend. Except this trend line is broken, you should be looking for opportunities to sell in the market. You should be looking for opportunities to take market to the downside, because you want to be a winner, because it has proven that traders that trade with the trend always have 97% of their win trades. Mostly if you understand what you're doing in the market. Now let's move down to 4 hours. Now let me quickly explain something here. Now let's take a back test on this. The reason price pulled back here was because of this support zone here. This was the move that took price to the upside. So like you can see here, this was the move that took price to the upside. Now, except this trend line is broken, we should be looking for opportunities to sell. Now moving down to the 4 hours. Like I explained in one of our videos, I say whenever price comes to this trend line, you should look for opportunities to look for trend reversals in the 30 minutes on the lower time frame to take market to the downside. I explained that in the tutorial trading with a trend and trend line trading strategy. So if you're yet to watch that video, I'm going to be leaving the description below so that you can click on the link and get involved and know what it's all about. Now, whenever a market wants to change structure, there's something the market does. It either breaks the structure. Let me take this out. You already know that the trend flow is bearish. So let's draw a trend line at 4 hours. Now we can see here, now how do we recognize our structural level? Like we mentioned in the last video, circuit behind market structure, we said to easily identify it, we go to the last candle that gave us lower high. So this was it. Price was playing around the zone here. And what did we see? There was a break of structure here. Here, structure was broken. And what did we see? Price came back to that same level. We tested it. Sorry. We tested that same level and finally broke it. It broke it at this level here. Yeah, this was the candle that broke the structure. Yeah, so we know there's a break of structure. What we're expecting to do is for price to ride the market or to the upside. And what did we do? It came back to the same level here. We tested this last institutional candle. Now to pinpoint the last institutional candle, let me easily zoom this out. See, this was the last candle that went up before the whole move that took price to the downside. Price actually came to that zone. Price came to that zone, and so many folks will be looking for sales here, whereas the market has already broken structure, looking for opportunity to take price to the upside. What did market do? It pulled back to this zone here. Now let me easily show you something here. This here, there's a name for it. Whenever price come back and pull back to what its zone twice, it's called market structure hold. It shows that the trend is going toward hold, meaning the price that broke the structure to the upside is really going towards hold, no longer pulling down to the backside. These are traders coming back to this zone to get what more entries to ride the market still to the upside. And guess what happened? Price continually what moved to the upside. Now, since this is a break of structure, two things happened here. One, the trend line was broken, and also there was a break of structure, showing that the market is about to move in a what opposite direction. Now, this whole move that happened here was caused by smart money because they wanted to take the price to the downside and run out these traders. This whole move here is all smart money concept to run out the price, the liquidity that was sitting here, the whole liquidity that was sitting here at the zone. Some traders would have been closing their position thinking the market's about to reverse. And what did we see? We saw price still what move to the upside. So price still moved toward to the upside. Now, in case you missed that entry, this same another entry for you, another strategy of getting involved, where the trend line came back to, the market came back to the trend line to ride price continually to the what, to the upside. And now, guess what? Some folks will be thinking, "Wow, this market is actually a bullish market," but whoa, it's not. Now, advanced guys knows one thing: this whole move here was not clearly defined. This whole stuff here was not clearly defined. Let me point it out. Sorry. If I can get this out. Okay, let's go. This whole move here was not a clearly what market structure change indicator. It wasn't really specified. It was just showing kind of like a support and also showing a head and shoulder pattern. But it's not clearly defined. So what did we see price do? Price came here and gave us a continuation trend, showing that this market was still what hold. Did this out. Now let me easily draw this out. This right here is showing a flag, and which indicate that the market structure still is going to hold. Now we've seen price move back to that zone, so what we're expecting price to do is to what? Still ride the market to the downside. So which shows that the bearish still continues. Now reason why I said you should do so using the higher time frame to do your analysis. Now if you come to D1, the daily time frame, let's move there and see what's happening. You can see the move is just so small, and this small move cannot actually reverse the market. The structure here has not changed in the daily, so the structure here has not really changed in the daily. So it shows that the market is still going to what? Go back to its original state, which is what? Bearish. The structure has not yet been changed, fully changed. So it's still going to be what? Going down. This was just a what? A move to what? Get more traders in the trade and what? Trick out some traders that doesn't know what the trend is saying. Okay. Now let's move back to the H4. Having understand what the market flow is gives you what? An edge over what? Price action. And this helps you what? Do your analysis what? On an understanding, and you what? It's hard for you to be tricked out. Now I want to say something briefly. There's something called a counter trend trading, and this is for professionals. Now reason why I created this video is for beginners and also for what? Professionals. Now advanced traders, professionals, they trade what is called counter trend trading. Now we understand that this market is bearish, but pro traders understand something: that market doesn't just fly down or go up. Now, like we said, this market is bearish. The market doesn't continue going down all of a sudden. There's something that is called pullbacks. Now, that pullbacks is where professionals get in and what? Take little piece from the market and just what? Leave the market. Understanding the flow. The first thing you need to do is understand the trend. Once you understand the trend, you can be able to what? Trade the counter trend trading. Now, let me easily show you what counter trend is all about. I might not be able to cover it all in this video, but I'll just give a glance. Be in a future video, I will do more on that. Okay. Now we understand that this market has been moving, touching different zones here. So what pro traders do is they wait for the market to come to what? An area of value. And what they do there is get involved and just ride the market. Now let's say this market is actually bearish and market has come to this trend line. What they do is this. Okay, let's just leave it like this. So since the market has come to the trend line and we know that the market is bearish, what they do is they go down to the lower time frame. Let's say 30 minutes. Still using your trend line in the higher time frame. You work your time frame from the bullish down to the bearish, from the higher time frame down to the what? Lower time frame. Coming to the lower time frame to do analysis can be very wrong because you get stopped out. Manipulations often happen in the what? Lower time frame, but in the higher time frame it's hard to see manipulations. Now what did we see happen here? Let's get this chart fixed first. Good. There's a break of structure here. Let's identify this. There's a break of structure here. Okay. Okay. This was a break of structure because this was the last institutional candle. This was the last candle that took price to the what downside, and all of a sudden it was broken. Now let me text this out. Break of structure. Okay. 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 I think I have it now. There's a break of structure here. So what happened? Price actually came back. Now there's one thing we should be looking for, and that's reversal. Now, market structure change indicator are double bottoms or double tops or head and shoulder or a cup and handle, whichever one. But it happens in the case. Let's see what we saw here. There was a break of structure already, and what did we see? We saw a double bottom here, double bottom here. So it wasn't clear, but this is it. Oftentimes it's not always clear, so this is it. If I say triple bottom, that's fine. And that was what did we see price do? We saw price took market still to the upside, and there was another what pullback. Now, like I said before the earlier time, this is market structure hold. We saw it in the 4 hours. So this market structure hold, and the market what went back up from the zone. Now there's some breakout traders that wait for price to come break out from that zone. So what they do is wait till this happens. Whatever strategy you're using is fine till this happens. See, there was a breakout from this what trend line, and this trend line happened to be in the 4 hours. Let's go back to the 4 hours. The 4 hours. See, let's zoom this is. See, this was a breakout. This is a breakout. So if we've identified this zone here, if you go back to the 30 minutes, so this was a breakout that happened, and all of a sudden there was a what move to an upward direction. So, and a perfect way to exit this market is simple. Let's get this out first. It's to be able to what identify what the market is doing. It's an exit zone. See, what did we see happen here? Price actually broke the trend line. Price actually broke the trend line. So this is how it happens. Most of the time, it's a trade with a counter trend. The market actually bearish, but you look for an opportunity to what right price to the what upside. And oftentimes, pro traders understand one thing: the risk management. If you're able to pinpoint that risk, to reward ratio and also understand what the risk management is all about. It gives you a percentage of what winning in the market. You want to always want to risk low whenever you're trading against the trend, and you risk high whenever you're trading what with the trend. So that's all.